Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Anthony Botticella, CEO of Fortress Trust, and David Siemer, co-founder and CEO of Wave Digital Assets. We're here to discuss the latest public and private investment trends in Bitcoin. It is great to have the both of you with us. Before we get into that, Anthony, if you can give us a brief overview of where you sit within the digital asset ecosystem.
I'll kind of give just a brief background about myself. I come from the TradFi space, attorney by trade, so I've worked for all the major players in wills and trusts. Came in at cryptocurrency in 2018 at BitGo, and I was a co-founder of Fortress in 2021, and what makes Fortress very unique is we're a qualified custodian that provides scalable custody infrastructure for fiat and digital assets. I think we're the last qualified custodian that's gotten a charter, as states have slowly pulled back. So hopefully with the new administration coming in, we'll have more companies coming into the space as well.
Yeah, it'll be interesting to see how this plays out from a jurisdictional perspective as well. David, give us more info on Wave Digital Assets, where you sit within the ecosystem.
Yeah, thanks for having me. Wave Digital Assets, we're a crypto asset manager, a fairly large one. We manage assets for a lot of institutionals, high net worth. We do a lot of work with crypto corporates to manage assets for protocols, miners, exchanges. So my background is early stage tech investing, got into crypto back in 2010 and just kind of been here forever.
It does feel like forever in the world of crypto, doesn't it? So David, when we think about the crypto space right now, it feels as if integration and institutional adoption, this is where we are. It's down to user experience, how we're familiar with terms from TradFi to DeFi, and moving along as the global capital markets continue to evolve and build out its infrastructure.
Yeah, and most things are great. We're seeing a decent market swoon right now, which was kind of expected. We kind of stuck around 100,000 for a while, and people were a little bit exuberant in crypto. So we've, a lot of this Trump administration and what they've been kind of coming forward with, and taking the SEC off our neck, and a lot of things have all been incredibly positive. But people kind of expected to be even more positive, I think. And it's only been like 5 weeks, so I don't know why people expected it to be more positive already. Like, people keep saying, where is this digital asset reserve? Where is X or Y? And I think all that will happen. I think the reserve actually definitely will happen in this country. It'll happen in a lot of other countries. But it all takes a little bit of time. But crypto's, notoriously impatient. This sector is still heavily dominated by retail. The stock market is like 80% owned by institutions. Crypto is like 5% owned. So the whims and kind of hype cycles are pretty powerful in this asset class.
Yeah. And Anthony, when you think about the shifting compliance and regulatory landscape, it's unique to the US the way our legislation and regulation evolves, right? So
right. I think the biggest thing right now, what we're seeing with the Trump administration, is what the crypto industry has asked for over the last 10 years, 15 years, is give us the regulation, allow us to operate in the bumpers. And I think with Trump coming on board and the new, crypto czar, so to speak, we're kind of moving towards that. I think we've realized that other countries, Asia specifically, was eating our lunch in the crypto space. And all the crypto OG players have always asked, how do we operate in a regulatory, compliant, and an efficient manner? And I think we're getting some of that clarity now.
Yeah, I mean, you hear it from other emerging technology spaces as well. What is data privacy governance going to look like? How is AI going to play out? What does cybersecurity guardrails look like once it gets onto, the national scale here? And these aren't things, to both of your points, that you could just flip on a light switch and that framework is created, and nor can we just, work ourselves into other frameworks that are already globally established. It just works very different here.
Yeah, it's been regulation by enforcement, which is not the appropriate way. I think that's the part where we need to move the industry forward. We've been asking for it. SEC is now closing cases against Coinbase and Crack, all the players that have originally asked, tell us what the rules are and we'll operate them. You don't want the wild, wild west? Allow us to operate in the bumpers that you're providing.
Right. And David, that's what the industry has been advocating for since its infancy.
Yeah, we're an SEC regulated asset manager, here in the US. It's been a scary time. I hadn't been doing any of these shows for a couple of years until the new administration. We kind of went stealth for obvious reasons. We're all B2B anyway, so there's no huge reason to kind of put our hands up and say, hey, SEC, take a look at us, through a lot of marketing dollars and whatnot. But as I said, the world has changed pretty dramatically and very quickly. Sentiment has changed wildly. The institutions we're always kind of coming in, and now they're really coming in. The recent things we've seen have been a little bit negative. The rise of meme coins, wasn't a good thing for the crypto space. The Argentinian, whatever, rug pull scam, was particularly bad and particularly visible. Those things always make things really hard for crypto. I think that's a lot of what we're kind of seeing right now in pricing is just. There's obviously, the people on this panel, we're very, serious guys. We're, doing this the right way and trying to follow all the rules. And, whenever there's people that are not doing that, that kind of hurts the whole space.
Yeah,
Right.
And,
to
we're
me, it
seeing
reminds me of the old days of the penny stocks,
yeah.
Yeah.
buying the OTC pink sheets. I think what the market is looking for and what all of us are trying to provide is that compliant regulatory environment with, like for us, for Fortress, we're a qualified custodian. How do you segregate the assets? How do you allow clients to move into that space where they feel safe, feel like nothing's going to be rug pulled? Do we advise clients on what crypto coins to buy? No. But to your point about the meme coins, I think it's the sexy news. It's the stuff that gets the airplay, but it's not really the industry. That's
Right.
a small fraction.
And I would agree with you, Anthony. I think sometimes we tend to think very US and Western focused, right? Where we're thinking about the value and what the trading looks like and what, how it's being held as speculation or as a hedging mechanism. When at the end of the day, this infrastructure is helping to grow micro economies globally. That's how you're doing e-commerce, cross-border payments. It's helping as an inflationary hedge. It's alternative forms of capital formation and there are other applications to this than just what meme coins and Bitcoin are doing, as an
And I
example.
think that's the part. So I say that coming from an immigrant background. My parents were from Italy, and I try to explain cryptocurrency to my mom. So it's a very fun conversation because she doesn't understand it. For her, she's like, "Well, I could hold gold. I can see it." But I said, "When was the last time you walked into a store and paid with gold? You want to send that back to Italy? You can't do that with Bitcoin or ETH. I can send that in 10 seconds versus having to go to the bank, send $1,000. I think that's where cross-border payments are huge. It's not regulated by anybody in the sense that there's no central bank that owns the cryptocurrency. And I think that's the play for the market.
Right. David, there's a big unlock that's taking place on March 1st, which could be a catalyst. To explain more what's taking place.
Yeah, so from the FTX bankruptcy, FTX was a heavy backer of Solana. They basically ran the entire Solana ecosystem. They were actually the treasury manager for the Solana Foundation and for a lot of the assets that sat there. So they were very entwined. And, Solana didn't do anything wrong, but when FTX went down, it had a huge impact on Solana. That's how we got, $9 Solana for a nanosecond, which was a fun buying opportunity. But I said it's come back. But when everything came back in today's dollars, I think they had $8 billion of Solana sitting in FTX's balance sheet, and they've sold it. It had a lock. There is a big balloon payment coming March 1, which is large. I mean, I think it's like in today's dollars, even it's like $1.5 billion of Solana unlocking, or maybe more than that now. And it's, it is impacting the market. It's a lot of Solana to absorb, but I think it's oversold. A lot of these Solana is already hedged. There are very deep futures markets in crypto. You can go on Bybit or Binance. So I know a lot of people that bought those locked Solana contracts. We actually helped broker a couple of them. And they are not, they've already hedged their position. They've effectively already constructively sold it through the futures market. So I don't think the impact will be as bad as people are worried about. But it'll still be bad enough. Like it'll still have a big impact on the price of Solana. And obviously Solana is pretty foundational, chain right now. Like all the meme coins are on Solana pretty much. The biggest DeFi platforms are all on Solana right now, not the biggest, but a lot of the bigger ones. And so and all those tokens end up being priced in Solana. So when Solana goes down, if you're buying Trump coin, it's paired to Solana mostly. So when Solana goes down 10%, Trump goes down 10% kind of naturally. And so do, 10,000 other coins. So it is a little bit of a rough event. It'll be over soon, and I think we'll be back to normal in no time.
Right.
Hopefully.
I'm sorry, go ahead, Anthony.
Sorry, I just say that my biggest concern is the potential currency devaluation of that. I mean, it's like, how do you play into that market? And that's the biggest fear right now. And I think that's what creates fear in the crypto space is like events like that. It's like, how do you balance that with the right objective going forward?
And that was the argument I was going to make. You can make the argument that this does and will continue to happen when these vulnerabilities expose themselves in any asset class. And this is when you take the opportunity to learn. And to your point, how do we manage this going forward? Whether it's security, around the blockchains, and I want to get into that with you in a moment, or providing redundancies or understanding how to hedge against these risk events that are not the most transparent or easy is to plan for. So Anthony, when you think about how fragmented the system is right now, and as it continues to evolve, what about hacks going forward? What can be done to mitigate that? And then what about security and transparency overall as it relates to blockchain?
Well, I mean, I think the biggest thing, that most recent hack, Bybit. And the biggest thing is if they had segregated wallets where you have certain tap policies where clients can't exercise 1.5 billion out of it, that helps limit the amount. Also, you got to base it on your client risk profile. And I think that's the biggest thing, is you just have to have those parameters in place. And that's why, certain companies like us, Fortress, BitGo, they have certain parameters that they've put in to protect client assets. When it's just coming in and out and you're not looking at what's going on, that's where it creates the risk, the liability, and the hacks.
Right.
Have it in a certain amount. It's like your checking account. If I wanted to pull out $1,000 on my ATM today, it's capped at $300. That's not done because I don't have the $1,000. It's done for my protection. And I think that's what some of these players need to have from a retail perspective, and also from an institutional perspective.
Right. And I would agree with you there, because at the end of the day, I thought the response was immediate and it was upfront. So there was what you would think in terms of detection, mitigation for next time, and then an effective response overall to the environment versus kind of, hiding behind the curtain and figuring out, throw something against a wall and see what sticks. I think it was a constructive response as well.
I think you did great for the marketplace, saying, hey, we're going to cover all the missing assets. I think it puts stability back into the crypto sphere.
Right.
Yeah, and they were great actors, Bybit, they did a good job of mitigating the damage that happened. Obviously, it was instantly public without them making it public, so they didn't have a lot of choices. But and the hacks are, I mean, the hack definitely had a pretty big impact on sentiment of some of the institutions we work with. And because it was so sophisticated. Like, we're still getting all the details. It was North Korea, but like it was like 12 months in the works. They managed to get into some email systems and got into some other systems, and bided their time until this huge rebalancing was happening. Like, it was really, really, it's kind of brilliant in a sense of like how they got this big of a hack out of this one exchange, and it's not repeatable. Like, what went wrong at Bybit isn't necessarily going to go wrong at other exchanges. But it was so well done that it just makes everyone kind of remember, just these are bearer instruments. These assets are a little bit scary to be holding, which is why great companies like Anthony's exist that are a little more professional about it. But it is really hard to maintain these kind of assets with these kind of nation state actors going after you.
Right. Well, I mean, the question the industry has to ask itself, and I don't want to take too much of a cyber turn here, but is risk management and cyber, when you're thinking about the infrastructure, is that a forethought, or is it thought about at all? I mean, this is essentially the whole entire infrastructure is built on technology, right? So I think, cyber should be one of the first thoughts.
That 100% is correct. They should be at the forefront of every company that's operating in this space. Is how do I protect the client assets? How do I segregate them? How do I know that if the client gives me $1, I'm going to give them $1 back? And how do you mitigate any of the potential risk?
Yeah, but it is hard, and a lot of companies grow up starting small. I mean, Bybit wasn't, but like, where you see a lot of the hacks are, a new platform launches, particularly in decentralized finance, and they have wonderful intentions, but they're young and they don't have all the money in the world. They can't spend $20 million building out a security apparatus and penetration testing and everything else. So it's going to be a little bit endemic to the space. Again, that was a big, scary number, the biggest one ever. So that really got people's attention. But, I mean, there's always going to be hacks in crypto, just because of the the emerging technology, how fast everything is moving, how many new players we have every month. It's almost kind of unavoidable, and that's why people should mostly stick to very tried and true platforms. If you're going to play in DeFi, stick to the the Uniswaps and Radiums and whatever the world that have been around a long time, haven't had any exploits, and have a lot of money to figure this out.
Right. And David, with your tech background, this, it's such a competitive landscape, and there's this rush, whether it's internal or external product facing, to get products deployed. I mean, you've seen what's happened with AI just in the past couple of years. And AI, it's nothing new, but you have to ask yourself, do we know what the ROI and the risks on the back end, what that could look like? Because the bad actors and good actors are leveraging the same technology and moving at the same speed. So to your point that you just made earlier, rushing to get new platforms and products out there. It doesn't have to be specific to what's happening in the crypto space, but overall, I mean, they're all kind of fighting the same bad actors.
They are. I mean, and crypto is very novel in the sense that tokens are valued on network effects. So
Right.
if you want to have, unless you raised a $500 million like a Barrett chain or some of these really, kind of tentpole projects, the only way you have money to do all this work is to get a token out and to get value to it. So you kind of, most people still in crypto, they launch fast. They hope they capture some value with a novel player or whatever. And if they do capture value and they suddenly have, 10, $15 million, then they can get really serious about all the security. But it's kind of unfortunate how this kind of works, and we're seeing less and less of this. I mean, the ICO boom was a long time ago. We're in a more stable market. There's relatively few projects or meaningful projects coming to market each period than there was even like 2 years ago or 3 years ago.
And to,
But we're still seeing a lot of hacks. I mean, we're talking about one big one. There were 20 smaller ones year to date. Ranging anywhere from like 20 to $100 million that don't even make it in the news. It's just so common in crypto.
and I
Yeah.
think that's part of the issue we're dealing with is speed and efficiency. And I think that's part of where I think some of what the TradFi principles of, we double check a wire, we call the client, make sure that it's this actual person doing that. So sometimes fast isn't the best. I understand the speed and efficiency, but you have to have that with making sure that you're covering all your bases, making sure that Tony's withdrawing the money, not an illicit actor. Maybe sometimes a little bit slower. Maybe it's not a week from a wire, but having that double check and balance and using a qualified custodian, working with the exchanges, figuring out how do you do that, having the 2FA, all the security measures in place, because sometimes people skip those efficiencies for speed and then they
Right.
pay the price later.
Yeah. So at the end of the day, really to advance this forward, when you're thinking about retail offerings or just growing it from an institutional perspective, it's going to come down to quality, space, kind of, merging together with the TradFi DeFi principles and having, to your point, qualified custodians and infrastructure that is verified.
Correct. I mean, the biggest thing too, I think, and I don't want to speak out of turn here on the bite, but when you don't have whitelisted addresses and you're moving funds, that should be an immediate red flag. Like if I'm pulling money out of my bank and it's going to a bank I've never used, the bank should call me immediately and be like, "Why are you sending money to this bank?" So those are the checks and parameters that I think need to be put in place, things that we're working on, things that we're moving forward in the industry.
Yeah. And David, to wrap up here, when you think about moving forward as well, whether it's 1 year, 3, 5 years out, what are the catalysts going to be? What's it going to take to continue this trajectory that we've seen? And not just, momentary blip in time where there's been some volatility in the market, but as the asset class continues to mature.
Yeah, it comes back to the first thing you said when we kind of launched this segment too, is that we still are very short on actual functionality in crypto. We have a lot of financial tools in DeFi. We have a lot of price activity with speculation. Crypto has not changed most people's lives at all. And it obviously takes a long time. The internet was around for 30 years until we had the dot-com boom. So it takes time, and some things are coming. We all thought NFTs was going to be, what really brought, kind of crypto into everybody's living room and everybody's wallet, and then it wasn't. And meme coins are kind of the du jour thing right now, which is just unfortunate. But we're still very short on where is crypto touching people in everyday lives. But it's coming very rapidly. There's 100 solutions around the world, identity and stablecoin payments and fiat and remittances and all those kind of things are moving up pretty quickly. But what we're seeing it is also not so much a first world thing. Like where we really are seeing a lot of adoption is in the developing world. They don't have banks, they don't have fiat rails, they don't have anything in some places. So there you're starting to see it actually touch people's daily lives, but it's just, but it's still pretty small. I mean, we are deploying money into Africa, onto micro lending platforms, and they're trying to use crypto backends, and it actually works better without crypto. It's slow. It doesn't, it's hard to settle. It's fees. So they're going to get it all on a crypto backend eventually, but right now they're doing it more on typical wires.
Yeah.
So it takes time.
Yeah, and that's the biggest thing is crypto is it's that asset's the first to tank, first to rise, and it's the one that gets the news. It's sexy play what the market wants to hear. And I think as people get to appreciate it, we're to your point, David, we're at the infancy of crypto and blockchain technology and how we move this industry forward. So 30 years from now, I expect a very different world that we live in. I expect crypto on balance sheets. It's just going to change the market.
Yep. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much. Appreciate it.